Hey everyone, welcome back. My name is Zane. We're going to be having a look at Polestar. When the EV maker Polestar goes public this quarter, its stocks could get a nice boost. So that seems to be the rumor that's going around right now, that Polestar will most likely have its public debut, its IPO, the SPAC merger, in the next coming month, hopefully either in May or June, but in this quarter, it seems to be in the second quarter of 2022. Now, based on this article, it's basically saying Polestar, GGPI stock, that's the Gores Guggenheim stock, it could rise over 91% higher than $23.93 based on comparable valuations with Tesla. Now, of course, we know Polestar is a Swedish electric car brand. It is partly owned by Volvo, and it's partly owned by Geely as well. And Geely does own a big percentage of Volvo itself. So Geely percentage of ownership in Polestar is magnified. Now obviously Polestar has big plans to go public with a SPAC merger with Gores Guggenheim. It will do this through a reverse merger with a special acquisition company called Gores Guggenheim. When that occurs sometime this quarter, GGPI stocks could get a huge boost based on comparable values with EV makers. Now, once the SPAC merger is complete, I do believe the ticket symbol for Polestar will change from GGPI to PSNY, Polestar New York. I'm not sure why the New York, I'm not sure why the YN, but that seems to be a very popular ticker symbol around Twitter. I've been trying to find out if it's official. So recently, the Polestar CEO, Thomas Ingeloth, he told Bloomberg that he thinks that stocks could get a spike once it go public. He said that he thinks the company could be well above $20 billion at a valuation. So right now, Polestar has a see-through market capitalization of $26 billion. That is because of page 37 of its slide deck show 2.1 billion shares at the close of reserve merger. Since GGPI stock closed at $12.21, the result of multiplying this by 2.1 billion is 25.9. So the real question is, what could the GGPI stock be worth? In other words, what could the Polestar stock be worth after its IPO? If you can compare this to a comparable measure using Tesla's NASDAQ Tesla market cap of 1 billion. For example, last year Polestar successfully produced 29,000 EVs, and this year is expected to produce 65,000 EVs. But Tesla made 930 EVs last year, and this year it could reach 1.4 million or higher. We can use this to value Polestar, by implication the GGPI stock or the Polestar stock. So here's where this article gets quite interesting. Obviously, we're going to go into the Hertz global deal. We're going to have a look at that. We're going to take that into account because Tesla had a deal with Hertz for 100,000 cars. Now Polestar has one of those same deals, a similar deal with Hertz for, I believe, 60,000 cars. So if we divide Tesla's market cap by its production rate for this year, we get an estimate cap of 764,000. That's per EV. Then if we multiply this by Polestar 65,000 forecast car production this year, we get a market cap of 49 billion, almost 50 billion. This is 91% higher than Polestar present see-through capital. This is 91% higher than Polestar present see-through capital. Market cap now 25.9 billion. It implies that GGPI stock is now worth at least $23.93 instead of its price of today of $12.21. Moreover, Polestar recently announced a Hertz global deal that it will buy 65,000 Polestar EV over the next 5 years. That's a big deal. In fact, they could easily mend that deal and turn that into 100 vehicles, 200,000 vehicles. We never know, but it's fantastic. So that could act as a serious catalyst for Polestar GGPI stock right now to reach this higher valuation when it goes public. That is what the CEO meant when he said that the stocks could be above the present price, so investors of GGPI stock will be in a potential gain when the deal closes. So obviously this is not financial advice, it's strictly for educational purposes, but what this article is basically explaining to us is that anyone who's already invested in Polestar, since the value of the stock is going to go up by an exceeding amount, your money will automatically be increased. The value of the company is worth around maybe 1.2 billion. That's without the SPAC merger completed. But once that is completed, it will be around 20 billion. Theoretically, if you're invested now, your money could 20x or 19x. But of course, I'm no expert, so this is not financial advice. That's just my opinion. I'm no expert in SPAC mergers. I'm no expert in IPOs either. So we've got other reports of people reporting similar things. Now we've got another article from Investors Place, and this will give us some additional information, useful information on Polestar SPAC merger. So the GGPI stock has inched higher over the past month, but this special acquisition company, which has taken over Polestar public, in a few months, remains at an implied valuation well below other early stage EV companies like Lucid Group. This is despite the fact that it has a strong chance as its pair to give Tesla a run for its money. If that's not, Polestar can at least scale up to 6 figures amount of annual deliveries. Either way, based on the current market value of Gores Guggenheim today, you would think that the merger's target was an all-sum run. This is a fledgling operation deserving of a discount due to high uncertainty over its ability to hit growth goals. Polestar has been in operation for several years and has already generated billions in annual sales. Polestar has established itself in the European EV market. Now it's the sights set on becoming a major brand in the US. And that's great because they also planned on building their first SUV in the US. That will be the Polestar 3, and it will be announced later this year. Annual sales 3 years could hit 17.6 billion. Given the implied valuation of GGPI stock today, we come to around 25.5 billion. How does this EV maker intend to hit this sale goal? First, it will roll out its existing models in the US. Then it plans to launch 3 new vehicles, 2 of which are SUVs. The market cycling out of growth plays could affect its short-term performance. Factor could also outweigh any post-SPAC boost it receive once the merger is completed. The long term, of course, is no slam dunk either. Growth tenfold in 3 years is tall order, but if you're willing to trade high risk for high potential, GGPI stock remains a great EV play. Now I do hope you've enjoyed this video. Thank you for watching, subscribe to see more, and of course I will see you in my next video.